All right, let's get straight to it. In today's explainer, we're breaking down a high-probability smart money setup for gold. We're focusing purely on institutional order flow and liquidity mapping. No fluff, just the exact setup you need to see.
My directional bias right now is strictly bullish. The primary target, that unmitigated buy-side liquidity resting right at 4704. Let's look at the execution and exactly how we plan to capture this move. The core opportunity today is all about executing a buy inside a very specific discount zone. If you look at how price is moving up from the lower boundary, you'll see the real draw, the absolute magnet for price, is that unmitigated buy-side liquidity sitting above the recent highs. We're targeting that exact pool.
Section 1. The macro draw on liquidity. But to understand why this specific trade actually works today, we first have to see where institutions are drawing price on a macro level. So zooming out to the daily time frame, gold is in a massive, aggressive structural expansion. We bounced right off that multi-month base near the 4,000 level. Smart money is actively engineering a run toward the all-time highs above 4720. They're accumulating, not distributing. The higher time frame order flow here is undeniably bullish.
Now, what's fascinating about this recent drop is that to the untrained eye, it looked like a major trend reversal. But in reality, it was a highly controlled internal liquidity sweep. Institutions purposely drove price down to mitigate the H4 Bullish Order Block near 4586. They rebalanced inefficiencies deep in a discount, loaded up their longs, and now they are primed to expand higher.
And this isn't just a technical play. We've got a massive macro tailwind behind this setup. The DXY, the US dollar index, is showing serious weakness. Why? Well, it's fundamentally driven by US Treasury debt buybacks. The Treasury is stepping in, buying long-term debt, which pulls those long-term yields down. When yields drop, the dollar softens. It literally creates the perfect macroeconomic storm to push gold aggressively higher.
Section 2, M15 Executable ICT Trade Plan. We've got the bias, we've got the macro backing. Now here is the exact execution model for today. Unlike earlier in the week, that M15 institutional confirmation, it's already happened. We've got an aggressive bullish displacement moving away from those lows, creating a clear market structure shift right above the 4620 level. The institutional footprint is right there, and the algorithmic sequence is officially in motion.
So here are the exact setup parameters you're going to need. Direction is a buy. Your prime entry zone is right inside that newly minted 15-minute fair value gap between 4618 and 4623. You're looking for a limit entry as price dips into that inefficiency to rebalance. Now your invalidation, your hard stop, needs to be tucked safely below the 4586 swing low. We take partials at 4650 to secure internal liquidity and let the runners go for that external buy-side target at 4704. That gives us a really solid minimum risk to reward of 1 to 3.5. Section 3, the retail liquidity trap. But here is the problem. Before you go placing any orders, you absolutely need to see the trap. This is exactly where most retail traders are going to get wiped out today. Just ask yourself for a second. How is retail money currently positioned right now, literally just hours ahead of today's major news catalysts?
Here's the crucial detail. Today is the Jackson Hole Symposium. Statistically, retail volume spikes around these kinds of events because traders blindly gamble on the outcome of the speeches, putting their stops tight against those recent lower highs. But smart money? They aren't guessing. They're going to use the resulting volatility from this event to sweep internal sell-side liquidity one last time, purge those retail stops, and then violently expand right to our 4704 target.
This perfectly illustrates a core principle of smart money concepts. Smart money uses news to deliver price, not to react to it. The fundamental outcome of the speech really doesn't matter to the algorithm. The event is just a high-impact volume injection mechanism to quickly reach engineered liquidity pools. Remember, you don't trade the news, you trade the manipulation.
Section 4, Final Execution Summary. Let's quickly recap these critical levels so you're fully locked in and prepared for the New York session.
All right, rapid-fire summary. The bias is strictly bullish, targeting the 4074 buy-side liquidity pool. The buy zone is that 4618 to 4623 M15 fair value gap retest, and your structural invalidation is a break below 4550. If we see a 4-hour candle actually close below that level, the higher time frame order flow is broken and the setup is entirely canceled. Stick to the plan.
If you found value in this institutional-grade explainer, make sure to subscribe to ICT Market Theory.
And if you want to execute these exact setups with proper institutional conditions, you can check out the FXTM account link right down in the pinned comment. So are you going to be the liquidity today, or are you going to trade alongside it? Manage your risk, stay patient, and I'll see you in the next analysis.